Alright, guys, let's do a global update today because the chaos is stacking up. I'm losing my mind every time I look at the headlines. It's getting worse, it's getting more ridiculous. So, the tariff war today is wreaking havoc across global economies. But which countries in the world are getting hammered the most? Well, we know BRICS is doing just fine. Even after hitting Brazil with a 50% tariff, they haven't collapsed because the global majority is big enough. It's a big enough economy to resist the US. Now, diversification is the name of the game. Countries that plan ahead are doing just fine. Now, China is a great example of why they have so much leverage against Trump today. Now, Chinese exports to the US was over 7% of GDP in 2006. The dependence was enormous. But today it's only 2.8%. It's a huge drop that prevents Beijing from being under the thumb of Donald Trump. So China's growth is over 5%. Even if the US stops buying everything Chinese, their economy will still grow. In fact, it might grow even more because the transshipment trade will boom, countries will buy more stuff from China and then redirect the shipments to the US. But if there's one economy that's on a downhill collapse, it's Germany. Now, this is a tragic tale because Germany's decline is not done yet. Yes, 2022 triggered the fall, and when you lose cheap Russian gas, that's a big whammy. Your industry starts to flounder, but at least you can still export to the US, right? Well, you could, but now your exports are facing a 15% tariff, Germany included. And that's why the plunge is just so predictable. Germany's economy has contracted by 0.3%. GDP has fallen thanks to German industries feeling the burn. This pain is just as severe in 2023 during the energy crisis, but it's not gonna stop. Germany, like Japan, is feeling a double squeeze from two big giants. Now you have the US consumer market raising barriers, and they are trying to replace German industries with their own. So instead of bringing in a BM or Volkswagen, the US wants to churn out more domestic Teslas, GMs, and Ford. Trump has been saying this for many months now. And on the other hand, Germany can't beat China in the export game. China has cheaper energy, more skilled labor, and a fleshed out ecosystem. So this leaves MERS with the worst contingency plan left to save Germany. Germany needs to pump a huge amount of government money for infrastructure and defense, and all these funds needs to flow down to industries. Because if the money doesn't come, it's game over for German manufacturing. And the big fall we see in Q2 is going to stretch to Q3 and maybe even beyond. And by then, the term made in Germany will be more of a jingle or slogan. No one will take it seriously anymore. But therein lies the problem, and the solution is going to affect everyone, and that includes you and me as well. And think about it for a bit. If selling to the US is getting harder and competing with China is near impossible, who will be the biggest buyer of German goods and services? It will be the government itself. According to almost everyone, the German economy will be back to growth in Q4 this year, positive 0.1% at the very least. And why are they so confident about this prediction? This forecast is simply based on the belief of massive deficit spending. Germany has dismantled their fiscal rules and they have the firepower to start spending like drunken sailors, which is extremely scary. This is now the playbook of countries that used to be an export power but can no longer compete. Trump's tariff, his tariff war has squeezed G7 countries into deficit spending. There's no other way out now. The US deficit is around 7% of GDP today. Trump wants to cut that down. But it would mean less trade and the G7 will have to buy their own products. And the only customer left is the government. Germany's budget deficit is going to hit 3.3% of GDP this year and 3.8% going forward. And it's quite amazing when we look at how much money is spent, how the money is being allocated. Over 10 billion euros are being spent on railways alone. Infrastructure spending is good, but it still doesn't solve the critical problem Europe refuses to admit. Your cost of production, especially your energy bills, are just too high. Remember the talks with Trump to reduce EU tariffs? Now, during the talks, the negotiations, there was one ridiculous condition that Europe agreed to, and is a central reason why their industries are more or less doomed. Now, ditching Russian gas was bad enough, cutting away Russian oil was even worse, but what do you replace them with? Do you replace them with cheap Chinese solar panels? Nope. The EU has driven the bars off the cliff. Europe has committed to buy $750 billion of US energy production, including overpriced LNG, three quarters of $1 trillion over the next 3 years to replace Russian gas. And this is really bizarre and outlandish. Instead of making peace and getting gas from your neighbor, you want US LNG. So you're telling me you want to liquefy gas, stuff it on a ship, and transport it halfway across the world? Can anyone really justify this BS? Yes, you might get a 5% discount off the tariff, but the trade off is cutting off your industrial lifeline. US LNG is not the solution, and I'm sure Brussels deep down knows this. So the pain for Germany isn't over. Yes, they can use deficit spending as a band aid, but it's not the solution, it's a losing battle. And the next country on our list in crisis is none other than the United States. So I can go macro and talk about a ton of things, but let's focus on one key deal that really shows this desperation. Now, Boeing, Trump's favorite company, is now begging China to buy 500 planes. And if this happens, it would end the sales drought stretching all the way back to 2017. From then till now, China has been relying mainly on jet planes from Airbus, which is a French company. It's a duopoly today, so it's either Boeing or Airbus. And will the deal close? We really don't know. Boeing definitely needs the money, and it's why Trump is bundling all his trade deals with Boeing planes like some internet PlayStation Wi-Fi package. It's bloody hilarious. But Lutnick just had to open his mouth and complicate things. And a big shout out to our sponsor today, Longbridge. Now, we know how important it is to invest. Inflation is not going to stop, and the best way to protect our wealth is to invest. Now, Longbridge is a MAS regulated investing platform that I use to trade the markets. It's an awesome zero fees trading platform trading app loaded with powerful tools and data to start your investing journey. You can load up on your favorite stocks and ETFs. They also have money market funds that help you earn generous yield as rates continue to stay high. Now, one big trend is the rebirth of China's markets thanks to the trade war. And if you're looking to buy stocks in the Hong Kong market, Longbridge is a good platform to start. You'll be able to enjoy lifetime commission-free trades in the Hong Kong market. Plus, you can also access the US markets and Singapore equities as well. Now, trading fees can eat up a lot into your profits, and what I love is Longbridge's commitment in giving a lifetime waiver of commissions. Now you can buy and sell stocks in the US, Hong Kong, and Singapore markets commission free, and best of all, if you sign up today, there are welcome rewards including free Apple and Nvidia shares. Deposit $2,000 for 30 days and execute 3 trades to get a bonus worth up to 800 Singapore dollars. In addition, enjoy an exclusive $18 cash coupon when you sign up and deposit the required amount. Take advantage of commission-free trading today and start building your portfolio. It's time to load up on stocks across the biggest markets in the world. Now, Washington is becoming a comedy show. The US government now wants ownership in critical US companies, including Boeing.
Why shouldn't the US government say, you know what, we use Palantir services? We would like a piece of Palantir. We use Boeing services. We would like a piece of Boeing. There are a lot of businesses that do business with the U.S. government that benefit by doing business with the U.S. government. I guess the question is, where's the line?
There's a monstrous discussion about defense. I mean, Lockheed Martin makes 97% of their revenue from the U.S. government. They are basically an arm of the U.S. government. They make exquisite munitions. I mean, amazing things that can knock a missile out of the air when it's coming towards you.
So now the US is trying to emulate China's model of state-owned companies. And this is wow. We are living in a new timeline. It's like Trump just ripped apart the fabric of time-space, and we are now in this new weird time continuum. Knowing this, what are the odds of China buying Boeing planes, especially 500 of them? We know Chinese demand will only grow. The bulk of aviation travel will be dominated by Chinese travelers, and that's why Boeing wants in. However, if Washington is part of Boeing, does China really want to directly benefit the US government? Now, they might buy a few dozen planes here and there, but the main strategy is still to stay self sufficient. And this one chart alone tells us everything. From 2010 to 2018, China bought a ton of Boeing planes. But now the focus is on Airbus, and that's the deliveries in orange. However, starting in 2020, we are seeing the rise of China's own jet carrier. Comac is starting to sell more and more planes within the domestic market. And in 2024, it reached a new high of 48 jet deliveries. This is a big milestone. It's also a big warning to Boeing and Trump. Your threats of weaponizing airplane parts isn't going to fly. We have the capabilities to make our own planes. So this situation is quite simple to read. China is dangling the Boeing carrot in front of Trump. Trump wants this victory very badly because the tariff war is already collapsing. If China bites, at least he can run a victory lap saying he saved Boeing. In the meantime, inflation is rebounding and the bond market is breaking. So go figure. But let's close this off with a big update between the US and South Korea. Trump has managed to corner the Koreans into a brutal trade deal. And this is despite the Korean president in the Oval Office making Trump feel like the king of the world. It seems that even flattery today is just not enough. Trump is serious about his global shakedown.
And I would like to mention that the only remaining divided nation in the world is the Korean Peninsula. And I would like to ask for your role in establishing peace on the Korean Peninsula. So I look forward to your meeting with Chairman Kim Jong-un and construction of a Trump Tower in North Korea and playing golf at that place.
아마 기다리고 있을 것 같습니다. 기다리고 있을 것 같습니다.
So I believe he will be waiting for you.
And this is something we have stuck onto this channel. The end game is to shift vital industries to the US. Now, Trump will either do it using Plan A or he'll do it using Plan B. Now, Plan A is the tariff war, set up big barriers to lower companies like Samsung or SK Hynix to set up factories in the US. Those are chip companies. To manufacture directly within the US ecosystem itself, to lock all the semiconductors within the country. Now, the second is to get countries to invest a ton of money into US industries. Either way, Trump is after his pound of flesh. You will either sing a song or you'll dance for him. He is demanding South Korea to stick to the terms of the tariff agreement, which, to be frank, is really punitive. Over $300 billion of investments into the US. And this includes private Korean companies plunging over $100 billion themselves. In addition, the Koreans are planning to increase their defense spending as well, which means buying more weapons. But guess what? Trump isn't going to play ball. The 15% tariff is still going to stay. But guess what? Trump isn't going to play ball. The 15% tariff is still going to stay. It's becoming the tariff rate for US allies and friends. It's the exact same rate Japan received after pledging $500 billion in investment. But does Korea even have a choice? Like Germany and Japan, they are facing a more competitive China, which is forcing their hand. This isn't just in markets like chips or cars. Meanwhile, the US is offering them a tariff market that blocks out Chinese competitors. And because Trump can still print dollars, which is the reserve currency, he can still dish out ultimatums like pancakes to his dependents. And that's just the truth when you peel back the layers. Now, in the shipping industry, China is also hammering Korea. In just 20 years, China has caught up fast. In 2000, there was almost zero Chinese ships hitting the sea. Most orders were sent to South Korea and Japan back then. But look at the situation now. China accounts for over 50% of global orders, twice as much as Korea. Japan is nearly off the table as well. And that's how efficient and competitive Chinese industries are. And that's why both Korea and Japan, they are in a big crisis. They have to more or less fold to Trump. So this era of the global economy is just one big shakedown. The US wants money so they tariff the world. Trump needs industries to head to the US, so he demands investments. US allies are also sandwiched in an impossible situation. they will have to pander to Trump at least for another 3 years. And Korea, for example, is thinking of issuing dollar bonds. And this isn't a coincidence, guys. Something must have gone down during the talks, and now South Korea is moving to support the reserve currency. By issuing bonds in USD, Korea is trying to drum up interest for dollars. Really weird when you can buy stuff using local currencies today, and especially when the dollar strength is dropping like a rock. So it won't be surprising if one day in the not so distant future, Trump orders the G7 to buy US bonds, and once that happens, then the mask will finally fall. And unfortunately, after everything I've seen, they will probably follow orders. Yes sir, three bags full. But let me know what you think. Can the G7 survive without US markets? And will China buy those Boeing planes? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.